I have seen a lot of videos from real estate and mortgage professionals expressing their opinion on the proposed 50-year mortgage. Some see some advantages to it, while others feel that it may be a very bad product. I want to remind those of you considering purchasing a home that your unique situation will determine whether or not the 50-year mortgage is a good idea for you or a bad idea. Everyone on here has shared an opinion, but their opinion is not addressing your unique situation. This proposed loan could be a good thing, and it could be a bad thing. If it becomes available, it'll be you who needs to decide what is right for you. Now, with that all said, I want to take a different approach to the proposed 50-year loan. I feel it's important for you to know the history of mortgage lending in America to better understand where all this is coming from, how we got to where we are at today. Back in the 17 and 1800s, mortgage loans in America were very harsh. There were 3 to 5 year terms, interest only, with the balloon payment at the end. You didn't really own anything. You were basically leasing your house from the lender. If you couldn't refinance, finished. Foreclosures were common, and nobody was shocked by it. By the 1930s, the entire setup collapsed on its own weight. The Great Depression wiped out jobs, refinancing dried up, and millions of families were tossed into foreclosure. The system failed because the structure of the loan was fundamentally unstable. During the Great Depression and the New Deal era, the 1930s and the 1940s, the federal government stepped up and rebuilt the mortgage process from ground up. The Homeowners Loan Corporation, HOLC, and the Federal Housing Administration introduced long-term, fixed-rate, fully amortizing mortgages, something that was predictable, something that a working family could actually pay off. And that's the foundation of the modern 30-year mortgage. So we've had them for approximately about 100 years. Now, the big headline is the current administration and the Federal Housing Finance Agency are exploring the idea of a 50-year term. The idea is to lower the monthly payment by stretching the term, but there's some serious trade-offs. Sure, it lowers your monthly payment, but you do pay dramatically more interest. You build equity at a crawl. You carry debt into your retirement years if you keep the loan long-term. That's not strengthening homeownership, that's stretching debt across a lifetime. But let's be clear, the 50-year mortgage does nothing to fix the real issue. America isn't building enough homes. We can't solve the supply shortage by dragging out loan terms. That just makes debt look prettier on paper. The mortgage has changed every time the country has hit a breaking point. The question is now whether or not we want cheaper payments today or genuine ownership and long-term stability. Those are not really the same thing. So if you're planning on buying a home, know the terms, know the cost, and let's talk about making a decision that's right for you. I'm happy to walk you through your options. To check out more on mortgages, rate impacts, and other strategies, follow me for more tips.